This has been the worst year for banks with an S in the beginning of their name. It feels as if it was a few days ago when a couple of banks with an S in their name collapsed, and now a third bank with an S in its name has collapsed. Signature Bank is closing down. This is the third bank this month to close down. Now you may be wondering why Signature Bank is shutting down. First, let's see how the other banks with an S in their name shut down. Silvergate Bank shut down because it was forced to take on loans because of the FTX exodus. Interest rates went up, the value of those bonds they were holding on to went down, and then they sold their bonds at a loss to repay those loans, losing over $1 billion, so they shut down. Silicon Valley Bank put too much money into bonds, interest rates went up, their bond values went down, and they ran out of money to give to their customers who wanted to take their money out, causing a bank run. Bank runs happen when customers take out so much money from the bank that the bank runs out of money, so they shut down. Signature Bank, on the other hand, did not run into any of these problems yet. So why was Signature Bank shut down? Well, Signature Bank didn't want to shut down. None of its leaders wanted to close the bank. The US government shut down Signature Bank. This begs the question, why did the US government and regulators suddenly shut down Signature Bank at a time when two banks had already shut down? Why do they want to shut down a third bank? Do they really hate the banks? Well, Signature Bank was one of the two crypto banks in the US. The third one, Metropolitan, had already pulled out of the crypto world in January because of the risk. Then Silvergate Bank chose to shut down because they lost more than $1 billion. That left Signature Bank as the only bank in the crypto banking industry. The US government's patience had run out after Silvergate Bank shut down. The Silicon Valley Bank shutting down mere days after Silvergate showed bank runs were happening at a rapid pace. The US government wanted to stop another Silvergate or Silicon Valley Bank collapse from happening. They also had reason to worry about Signature Bank. After Silicon Valley Bank and Silvergate shut down, people were scared about Signature's relationship with crypto that might cause it to shut down. As a result, customers were pulling money out of Signature Bank rapidly, billions of dollars worth, according to Barney Frank, a board member of Signature Bank. There was a danger that the bank would run out of money, so banking regulators chose to shut down Signature Bank, the last remaining bank handling transactions for crypto companies. US regulators went as far as saying keeping Signature Bank open would threaten the stability of the entire financial system. US regulators had to shut down any risky banks immediately. This way, the government could stop any problems from happening. You can't have a bank run without the banks. Financial regulators in New York shut down Signature Bank literally days after Silicon Valley Bank experienced their bank run. For context, Silvergate Bank announced it would shut down in March 9th. Silicon Valley Bank shut down on March 10th. Then the government chose to shut down Signature Bank on March 12th. All three banks met their end within 4 days. That is not a good sign. I'm sure all of you are wondering, what happens to customer money after Signature Bank shuts down? You don't need to worry. Since the US government shut down Signature Bank themselves, they will make sure that the little guy comes out on top. The US Treasury Department, the Federal Reserve, and the Federal Insurance Deposit Corporation, aka the FDIC, put out a joint statement on the same day they shut down Signature Bank. In it, they confirm that if anyone had an account with Signature Bank, the US government would give those customers their money back in full. All depositors of this institution will be made whole. No losses will be borne by the taxpayer. It is the same deal the US government is giving to depositors of Silicon Valley Bank. However, this doesn't mean no one will be hurt by Signature Bank's closure. If you are an investor of Signature Bank or a retail investor who bought shares in Signature Bank, the government will not give you your money back. All the leadership and senior management from Signature Bank have been removed, and the government is taking care of the situation with Signature Bank as fast as possible. Signature Bank's shutdown was so sudden but justified. Silicon Valley Bank is the second largest bank in US history to collapse. It's only eclipsed by the Washington Mutual, which collapsed in the 2008 financial crisis 15 years ago. The government will stop at nothing to prevent the Silicon Valley contagion from spreading to other lenders. The joint statement by government bodies explained that they were shutting down Signature Bank to protect the US economy, to restore confidence in the US banking system. This way, customers will be less likely to panic or withdraw their money from other banks because of fear. Remember, a bank run only happens if the bank runs out of money. As long as people don't withdraw too much of their money out of the bank, then it is safe. If the government doesn't want bank runs to happen over and over, they need to stop bank runs from happening in the first place and restore confidence in the banking sector. To that end, once Signature Bank closes, all $88 billion from Signature Bank will be returned to their owners. As for the crypto industry, Signature Bank's closure may have stopped further bank runs, but it has also stopped US banks from handling fiat transactions for crypto companies. Make no mistake, the shutdown of Signature Bank is a major setback to the crypto industry. Both Silvergate and Signature Banks were the two banks that supported the entire crypto industry. With both of them gone, customers of crypto exchanges won't be able to buy crypto 24/7 anymore, at least through cash. Using crypto to buy crypto won't be affected. However, using real money like dollars to buy crypto will be harder from now on. Selling crypto for dollars will be even harder because there isn't enough liquidity, especially now when the two banks responsible for the fast payment transactions have both shut down. Both Signature and Silvergate ran a real-time 24/7, up and running for 7 days a week payments network that was hard to replicate. Crypto has been officially debanked, at least in the US. US regulators only control banks in the United States. They do not control banks outside of their jurisdiction. Crypto exchanges will have to find other banks from overseas that want to help process fiat transactions for crypto. As for Signature Bank, the FDIC created a new entity called Signature Bridge Bank so customers can access their funds. Signature Bank customers will get their money back. Signature Bank investors, on the other hand, will lose their money. President Biden made a ruthless statement to Signature Bank investors, saying investors in a bank will not be protected. They knowingly took a risk, and when the risk didn't pay off, investors lose their money. That's how capitalism works. Look on the bright side, at least Americans can be confident their banking system is safe. Thank you for watching, like and subscribe.